Good afternoon, everyone. Jason here. Today is April 11th, and this is your aftermarket update. So I ended up having a good day here in the live call trading room, but that does not tell the entire picture. I was down as we got into the session this morning and began to trade, and I'm going to go through each one of these markets specifically and tell you what I was looking at and then what ended up happening here to finish out the day. So I got down to a little less than 0.5% on the CL and a little over 0.5% for a combined total of about 1% drawdown on the day here as we got started. I have a 2% drawdown limit, and I got to just a little over 1%. So it was not, as you could tell from that, it was a tough way to start the morning. So let's talk here about the CL. It wasn't quite as bad initially on the CL as it was a little bit tougher on the ES for me as we got started. And so I have a trade plan that we produce every day. And my trade plan talks about measuring the day high to low. We look for 70.5s. These are retracement cycles that we look for, and they are measured on your fib retracement tool at a 70.5% retracement. So that's the first thing that we look at here. We typically like to measure those from day high to day low, and that was our first shorting opportunity of the day. So as we got into the market, and you want to measure out your 70.5 retracement here, and this is on a 15-minute chart, you grab this swing high down to this swing low, and we had a level here at 40.11. Now, I did not take this first cut through it here. In fact, I took the second 15-minute bar through it, and it rallied all the way up to 27, and that stopped me out. So that was my first stop out of the day up in this area on my first short right here at this 70.5. My second short of the day, which also took me out, was right here as measured. You can measure this on your 60. I'm just happening to look at it here on your 240-minute chart. We had a level up here at 35 that we spiked into right up here again. So this was Sunday night. This was the spike, and then we came back up into it. I looked to get short at 35, and of course it rallied all the way up to 40.75. So that area right here was another stop out. I was looking to get short here. Ignore this bar here. In fact, this might be easier just to see it on the 60-minute chart and today's, right? So we come up into it here. This was into Sunday. We rolled out of that and came back up into it, and we spent the better part of the day. Now, one of the reasons that I liked this short here, again, is we were fairly oversold leading into it, right? We had overbought, rather, as we were leading up in to that level here today. So as I got dinged out, I got shaken out up here. The third trade here that I took was off of this 60 level. The sweet spot was 40 to 48 to 40.75. I look to get short at 40.60. So I come up here. I look to get short on a first-time touch at 40.60. It lingers and lingers and lingers, and then takes me out at 40.75. So I had 3 chances here today for setups that I normally take that ended up taking me out before the market finally did what we were looking for it to do. So if you'll notice up here, the high on the day is 40.75. On the trade plan, that was the very top of the range that we said that the market could end up driving up to before it got short, and that is 40.75. And then we looked to get short here, back here at the 40.60 once we got under it here, and we rode this all the way down, and we added contracts along the way, all the way down into our target here of 93. All right, so this was the trade that ended up working. So we took a stop, we took another stop as we were fading the market on the way up. And then, of course, we had this sweet spot at 60 and the very top of the range on your trade plan at 75. And as the market makes a high up there at 75, that's when we recognized the fact that the market was likely to pull back out of that area, and then the market came back underneath here, and we got short, like I said, and then we rode it down all the way down into this 39.93, and we added contracts along the way. So the secondary, the next trade that we got into, the one that I'm going to show you that allowed us to end the day, we have what we call the 9 a.m. to 10 a.m. swing zone, and I just turned on these color bands. So we're going to turn these primary levels off, and one of the things that we look for in this zone, so we say that there's going to be a move that begins in this 9 a.m. to 10 a.m. swing zone, and it generally goes about 100 ticks. Well, today it went from 40.75 down to 92, so that is 83 ticks from low to high, so not quite 100 ticks, but it starts inside of this 9 a.m. to 10 a.m. swing zone, and that is annotated here by this blue band. And the way that we look at it, and the way that we know that it may or may not be occurring, is that you get a long bar into the time frame, and then you get a big long bar headed back the other direction. That's a nice reversal. And so what we look for is a secondary way to get into it. So the first way to get into it was we got short at 60. The secondary way to get into it would be a 70.5, right? So it goes down, rallies back up, and then we'd be looking for another move to the downside. So what we did to end our trading day today, and it was almost an afterthought as we were looking to trade the ES. This was almost an afterthought into that trade, but as we were trading the ES, we had talked about leading into it that was a good place to potentially get short. Then the market rallies back up into this area at 56, and then we look to get short right here, 51, 52. And I just took a quick 10-tick grab on a 2-lot, and that got me down here very, very easily down through my first target, my first and only target of 10 ticks at 41. And then, of course, the market has been rotating back and forth since that time today. So, again, just so we're on the same page, I took stops leading into the short that ultimately got me to where I needed to get to in terms of a win-loss tick count perspective. And again, that happens, right? But we stayed well within our boundaries of our daily loss limit. I have a 2% daily loss limit. And on the CL specifically, I was at 0.45% or less than 0.5% on the daily loss or the drawdown limit that I have on the CL. As we got into, oops, let me turn these off here. I'm trying to turn this back on. As we got into our ES today, that was a little bit tougher for me today. And so one of the things, though, that did allow us to get where we needed to get to was our market maker levels. And there's been lots of talk. We talked quite a bit about those market maker levels, and they helped us out here today. So I'm going to deconstruct this chart here so we could talk about what happened. Now, this one I also took losses leading into the trade that actually moved and got me out of the hole, and then we took another trade to end the day that got me over the hump there as well. So, first of all, let's talk about the market maker levels on the ES. These market maker levels are broken down into 3 separate parts. There are the levels that form up and are tradable in the overnight session. They are based on price action of the previous day. So you could see here, these are first-time touches of these levels. There's a first-time touch short at each one of these, or long, depending on which side of the market you're on. So today, the market structure mid was 2042 quarter. It got up to 2043 quarter in the overnight session, and then dipped to 2033 quarter. That's 9 points. Go, go, go. Come back here at around 225, the European session open. The market hits the market structure signal, and we've already first-time touched this back here today, so this is not a first-time touch area any longer. And then it rallies all the way up to the market structure signal and then tags it to the tick and then fails out. Again, these are the market maker levels, and this was 203275 to 2052. So that is almost 20 points of ES move. Now, once we get to the open, the pit open here, we can talk about that. Okay, so here we are. We got into the pit open today, and candidly, I got busy talking to the folks at Top Step Trader and I missed this first shorting opportunity. So as the market opens up underneath the daily structure signal, it's a first time touch short of that daily structure signal. So what really would have happened here is this market came up into the daily structure signal and then came down to 47 and 2050 quarter to 2047. That would have been the first time touch short. I waited and played the short the next touch, right? Which is okay to do, but it's not as reliable as that first time touch. It would have given you your 2-point target. Anyway, I got taken out here as I tried to get short here on this, and then the market rallies up, right? And then we continue to pull back. And now what we did is once we hit this revision signal, what would have been, let me slow down here a little bit. Let's turn these back on. Once we pulled up into what was going to be the revision signal, we looked to get short out of this zone, and we were looking to hold on to the daily structure mid, right? So if you were in the chat room today, and I'm going to turn some of these levels off so that we can make this a little bit cleaner for you to see. What we were looking for is once we made a rally above the daily structure signal and could not get up to the daily structure target, okay? Also, we had what was the revision signal line up. We got short underneath your OTG support and resistance level here at around 2054. And this is the trade. This is really the trade of the day. We took the first target off at 3 points. So 2050 half was our first target, right above the daily structure signal. Our next target was going to be the daily structure mid at 204275. And so what we were looking for here is we were going to take 2 off at 3 points at the daily structure signal, 1 at the daily structure mid, and then 1 finally all the way down to the daily structure target. Well, what ended up occurring here, though, is we got down through the daily structure signal. We got all the way down to the revision target. Now I'm going to turn some of these off here so it's a bit easier to see. Okay, we came all the way down into the revision target, and that's where the market began to pause. And then we, again, utilizing your OTG support and resistance levels, we had a level right here. So this is where I'm going to pick up the trade of the day. Once we come down into this new revision signal and we fail to get up through this minor zone, right, on your OTG support and resistance level, that's where we look to get short. And we were looking for 2 quick points, and boom, it almost immediately happened for us as the market goes down into from this minor level. And remember where I told you I was targeting before, right? So I'm going to turn off the primary levels, and I'm going to turn back on the daily structure levels. We're going to turn off the revisions. And remember, I said once we failed to reach that daily structure target, we were going to look to get to the mid. Well, it ended up taking me out before it came down to the daily structure mid, but that's exactly what it ended up doing. And so the rest today, the market has just been rotating around between your market maker levels from your structure mid back to the signal and back down again. And that has been the way it's worked today. So again, if you were early in the session with us here today, you absolutely saw me take some losing trades. I was at a 1% drawdown today, which is halfway to my 2% drawdown limit that I have. So I wasn't close, really, to hitting my drawdown limit today. It allowed me to keep trading. And, of course, as you can see here, we were up nearly $700 on the day after starting out with a couple of losing trades. So I'm going to let you watch the final 2 trades of the day. It's about 2.5 minutes long. It is the short on the ES here at this level here. Let's see, what time was it? It was at 10:30 this morning. As we rallied off of your market maker level, as we rallied off of this market maker level here on your revision target, we came down into it right there, right here. We came down into your revision target, and we had that revision signal just above this minor resistance point, and then we took that short, and even though these shifted, we took that short and wrote it down to the daily structure mid. And actually, we didn't ride it quite down that far. We went from 2047 quarter, I believe, was the entry, and we wrote it down for 2 points on 4 lots, and we got in and got out, and all of that happened in about the course of 2.5 minutes. So again, I can't say this enough. I was down to start the day. I was only down about half of what my loss limit for the day is. I have a 2% drawdown limit. I was at about 1% on the drawdown, and we were able to come back and make all of that up and then end up the day at around plus $700. So I'm going to let you watch these 2 OTG trades of the day. And so without further ado, here are your OTG trades of the day. All right, 46.75 short on the ES, right underneath this. And I'm going to take all 4 off at 44.75. Okay, that's right down. I'm going to take all 4 off at 44.75. Just going to pull them all off the chart at 44.75. 48.75 is the stop. And you are into the European session close here. Actually through it now. All right, on the CL, I'm short at 52. 51.52 short on the CL right in this area here. I am in. The stop is 62. And I'm taking all of them off at 41. I'm in at 51. I'm taking them all off at 41. Stop is 62. I'm taking them all off at 41. This is the 70.5. I'm just going to do a quick grab off of this 70.5 if it'll give it to me. $52, $51. You've got 251 short at 60. There's 46 half on the ES. 44.75. I'm taking them all off on this ES. Okay. There's 49.48. There's a 1.25. Trail stop and break even on, and I'm out. My target achieved on this on the ES. Okay, there's my 2 points. Stop at break even. That puts me up at nearly $300 on the ES. Boy, look at this thing roll out of bed here. I knew it was going to. Wow, it's going to end up taking out my target down there. There's 42. Come on, get me 41. Stop at break even plus 1 on the CL. This will put me up here today. Move that to 40. 41 is the target. Trail stop at 51. 50 on the CL. 43, 42. And look at that thing come down here, about to take out what was going to be my target down there. Just took me out a little bit early on the ES, but we got back in. That's what counts. There's 41, hip and out on the CL. All right, so you can see just how quick those final 2 trades ended up filling for me. Both the entry and the targets hit very quickly. So one thing that I want to leave you with here today is trading is a marathon, not a sprint. You have your drawdown loss limits that you have on a day in and day out basis, and we're going to spend more time talking about that. But you have your drawdown limits that you look at on a daily basis. If you hit your drawdown limit is let's say 1%, then you would have hit that. Then you would have hit that level today, and you would not have been able to continue. If your drawdown is 2%, like mine is, then you would not have hit your drawdown limit today, and you would have been able to continue to trade, and we were able to dig ourselves out of an early hole. The bottom line here is it's your money and it's your account, and you have to trade it in a way that makes sense for you specifically, right? And that's what you have to do. So sound money management techniques and principles. Not every trade is going to be a winner, but when it does win and you have the right targets and you have the right stops, you're able to dig out of holes when you are able to get in sync with the direction of the market. So having said all of that, we appreciate you spending time with the videos here at the Oil Trading Group and the time you spend on the website and in our trading room. And until tomorrow, we want to wish you good luck and good trading.